And one, we are live. Hello and welcome to PropTechBuzz, a business podcast on global PropTech, where we talk to PropTech founders and CEOs from all over the globe and learn from them how they build and manage successful PropTech companies. We have an exciting guest today. His name is Sudarshan Lodha. Sudarshan is the co-founder of Strata, an online investment platform that enables you to invest in fractional commercial real estate. Their mission is to help investors make premium commercial real estate accessible and affordable to everyone and not just the ultra rich. So, before I welcome the guest on the show, I would like to request all our listeners out here, please hit that like and subscribe button because, as you know, PropTech is still a niche content and channel in that respect would need some support from the audience so that we reach a wider audience and do that also on Spotify because we launched in Spotify just 2 weeks ago. So if you're listening on audio mode only, just search for PropTechBuzz in Spotify. You will find us and hit that follow button there, and also give us ratings because we know for sure we have a lot of repeat listeners. We just hit a 1,500 subscribers mark, which I think is a good milestone to achieve, even though this is a very niche content space. Thank you again. With that, let's welcome Sudarshan. Sudarshan, welcome to PropTechBuzz. How are you doing today?
Doing well. Thank you so much for having me here.
Uh, just that the weather in Bangalore did not treat you well, right? So we got delayed by 30 minutes, and that is how it is. The weather in Germany, though, is getting warmer. We had a long winter this time, and it took at least end of May for the weather to get better. So these are the contrasting weathers. We are going to talk about Strata today, Sudarshan. However, before we get to the meatier stuff, could you tell us your transition story, your founding story on what led you to begin Strata?
Sure. So started my career as a lawyer. Uh, was practicing for about 9-10 years. Predominant part of the practice was in real estate litigation, and then the second half of the career was with private equity in real estate and in technology firms as such. So that's where I got to learn on the both the sides of how documents are drafted and how it eventually gets interpreted in litigation as such. So that has been the journey. The idea of Strata started from law first, and then from a real world problem. From law, one of the things in law which I felt is it's not scalable because you cannot invest or implement technology in a large way. So three challenges which I had in law is first, I cannot clone myself. Clients only want Sudarshan; they don't want to work with anybody else. This was one reason. Second was Sudarshan is the brand, uh, and I could not build a brand which is age old that I compete with larger firms where the brands are the brands and not the people running the show behind it. And third was I could not implement technology at the end of the day in law as such. So there was always a thing for me to look out for something more exciting, where I can implement all the three, which is where the brand is the brand. I can clone myself, which means uh, in law it's all about billable hours, right? So if I'm sleeping, I'm not billing. But when
Hmm.
you build brand, then you can continue making money even if you're sleeping per se. And the third was
Is,
obviously technology.
is, isn't there a concept of legal tech as well? So there's a lot of technology
It,
play in legal.
It is, but having said that, it's not very widely used or adopted in India as of today. It's
Hmm.
a very broken system where technology implementation is really the most uh, for the smallest of things per se, but not for the real world thing. Right? So it requires human touch. Unfortunately,
Got it.
I believe AIs of the world today can solve a lot of the things going forward,
Right.
but at least 10 years back, that was not the case, or 3 years back when I started Strata, at least that was not the case. So Strata started with a thing where me and my co-founder both had decent amount of savings. We wanted to buy a property in India, more so in Bangalore. We didn't have the required amount of money to buy. So as a normal person would do, we reached out to our friends, and family members. I come from Chennai. We were in Bangalore. We moved for work and for business. There are three things which happened when we reached out to our friends. First, and family first, they're like, "Hey, Sudarshan, I know you have money. Why you're coming to me? Clearly, you're making an arbitrage." So there were trust issues. Second was, no, I trust you, but I don't have the liquidity to deploy that particular thing to what you're asking as of today. And third was, I probably don't understand Bangalore, right? So I don't see the vision, what you see in a particular property. I'm based out of Chennai. I probably want to stay invested in Chennai, right? Then it's like a simple way, right? You reach out only to your inner circle of friends, you ask them, and then when you meet in parties, you meet your other friends. You're like, hey, I wanted to buy this property, I couldn't. Then your friends say, hey, you should have told me, I would have invested with you, right? So this is about real estate, right? Real estate investments are a little more closed ended. It's only to the inner circle of friends, your first port of call, because it's a very large investment. So you don't want to do it with just another person or just your acquaintance or just your normal friend
Right.
per se. So this is where the genesis of the idea started. Is how do we solve for this? Because there are like-minded people who want to buy that particular property, but they're not investing today purely because they don't trust each other as such, right? So the idea was to build a platform where people trust the platform. The
Hmm.
platform has only one agenda, make money for you, and no other agenda around it. So that like-minded people can come together across the India and probably the world eventually, where they can come and buy a particular property which they feel is a lucrative investment opportunity for them. So that's how Strata happened.
Got it. Just curious, are there is there a trend of lawyers moving and building tech companies, or you are one of the rare ones?
I honestly, it's the first time I've been asked this question, so I would not have a clear approach. I don't want to demean any lawyer in case they've not been creating technology companies or creating businesses per se. But usually, lawyers are very commercial minded.
Hmm.
But because of the nature of their business, they even tend to get very pessimistic because they look everything from a legal standpoint, and they somehow tend to miss out on taking those large, riskier commercial calls
I
also
see.
as such. But I would go back a step and say I'm a Marwadi first, then a lawyer.
Got it.
So I'm definitely not the first Marwadi who started a technology company in India. And
Got it. So your influences were beyond your circle of legal people, right? Okay, got it.
yeah.
Um, you mentioned, so again, another question is, before we talk about startup, what does it take for a platform to build trust in this space? Like what are the elements that are required for a new entity to start building trust?
So, in my view, I think it's all about transparency. You be upfront to your investors that, hey, this is what it is. I don't want to make up stuff. I don't want to hide things with you. And if you're transparent about the entire approach to investors, good or bad, it's the right of the investor to know. And if
Hmm.
you're transparent, you may probably get rejections, but on a long run, this pays out, right? And I think this goes back with, in general, about how large businesses are built is purely from that standpoint where they cared about their customers and they didn't compromise at any given point, right? Let's take Infosys, let's take Bajaj, let's take Tata's for the world, etc. They've been known for that. So that has been our approach as well,
Hmm.
as that you give a transparent platform, let investors know each and everything before they decide. There's no point making up or hiding facts
Right.
because it's hard-earned money of the people, and if they're deploying, they should know everything before they commit anything for that. Right? So that has definitely been one thing, and I think for us, what helped us to reach at the scale where we were or we are right now is purely pandemic, right? Like so we started the business more or less during the pandemic. My entire investors were sitting at home. Stock market crashed completely. Gold price shot up. Crude oil crashed. Bunch of things happening around, right? So that whole uncertainty period, and investors have money, right, to deploy capital. I mean, we're talking about India, and for a 50 crore deal, I just need about 150 people. So it's not a very large number of people we need. It's a very small set of people. So
Hmm.
the idea was getting a good warehousing portfolio at that time because that was the flavor of the day as well, and we hit it off. So I think that was our tipping point because the investors had 1 2 hours to listen to us,
Right.
give be an evangelist to an idea which is now transforming into an industry in itself
Yeah.
is one of the core reasons, in my view, was a tipping point of how we scaled very very fast vis-a-vis for a new entrant today. Getting, let's say, Ravi's time for 2 hours is
Hmm.
impossible, right? Because he's busy, has 100 other engagements. But pandemic, absolutely nothing to do.
Got it. So when you build this, how many years in existence now?
So it's been just a little about 3 years
A
in terms of
little
existence.
about 3 years. So I'm assuming the first set of investors who invested in your first property, where your network of friends, I suppose.
Not
That's
at
how.
all. Believe
Not at
it or
all.
not, it was not.
Okay.
It was, uh,
So
in my view, only about 2% were people who I knew,
right.
and 98% of the people we didn't even meet.
But trust
And
trust
as
happens over
from
time. You are a new platform, so maybe run us through your early challenges. How did you convince? Trust happens over time, only through word of mouth and stuff like that, right? So first deal, how do you get trust, and how did you get your first investors to back you?
like I said, tipping point. Investors had money. We were probably a great alternative fixed income product for them at that point of time during the pandemic. And it was probably one of the first times where it was such a large research backed platform with all the data pointers required for you to make an investment call, because this is typically the way people invest in real estate, right? They usually, it's hearsay. There's no data at all. They call their friends, they call some brokers here and there and check with them, hey,
Right.
what is the price of this property going around, and they take their calls accordingly, right? But even a 5% delta in a 100 crore deal is 5 crores. It's a
Got
large amount of
it. Got
money for you to, even if you want to pay that money, you should know
it. Right.
that this is the delta as such, right? So when here we come as a platform in the pandemic, saying, hey, it's absolutely transparent. Here's a dashboard. You can track everything. Here's the lease. This is what it is. This is what you're going to get. This is my fees, and this is the net return you're going to make. I think that really spurred up the entire platform.
Got it. And how long did it take you for your first property to get 150 backers?
So before the pandemic, we were doing a couple of other deals as well. It took us a
Got it.
lot of time for us to do it. In fact, we failed one of the assets as well.
Mhm.
Per se, it was we had almost 80-85% subscribed, and the pandemic had hit us. Then we just took a conscious call to just return the money back, because
Got
there's
it.
no way we're going to acquire a property. We have no idea what's happening in the
Right.
world as such. So we waited for 2 months, and then we full fledged started per se.
Got it.
But the first asset in the pandemic took us about 45 days. It was a 54 crore deal.
Mhm.
It took us about 45 days to register the property asset.
Got it. Could you run us through an experience of a project like this? Like, what's your experience like with the customers? How does the business model work out? Like, you go and acquire an asset with the promise of paying them off in the next 3 months or so. Help us take us through the experience of your experience and your customers' experience.
Sure. So we have a very stringent diligence process which we follow before we acquire a particular property. Like I said, it's a lot of data led. Before we do it, at least in the earlier days, it was not as much as which we do as of today,
Right.
as such. But like for instance, one of the data which we do is track the sale and lease of the entire micro market as such, to understand that the price at which we're entering, is it mark to market in terms of rental, or other benchmarking with other sale transactions in terms of pricing. Is that also something which is critical for us to evaluate and do that? That's number one. Second, we do the technical due diligence about a property as well, to understand leakages, is the tenant paying on time, bunch of other things, so that at least we know what we're getting into as such. Number one. Number two. Third, which is now what we do very proactively, and we've been doing it for the last 1.5 years, is we make our investors itself our reference point as such. So we do a profiling of our investors. We know who is working in which industry, which company, which city, etc. So if there's any tenant which is remotely close to either of these three parameters, or probably is connected in the same company itself, we ask our investors to check, give us insights about the tenant. How long is he looking at staying? Is he happy in the property? Not happy, etc. What are the challenges, etc. So this also is another layer of data led which we do.
Hmm.
before we acquire a particular property as of today, right? So that's all it goes behind an acquisition. Then the way for an investor, it's simple. The once an asset is listed, all the property documents, lease transactions, legal due diligence report from a tier one law firm, and we do a webinar so that there's no misinterpretation or any kind of mis-selling at any given part. Like very, very transparent and an open webinar. You can come and ask us anything as such, and it's an open forum. So we usually have about 400-500 people attending sessions like these about a particular opportunity. And then, in fact, at the highest, we had about 900 people at a go who had attended our webinar as such. This was, I think, in our third asset, and we had subscribed that in just about 2 days. It was one of the fastest assets which we had done at that point of time. And then the investor likes a property, he signs an expression of interest, transfers some money to commit and block his investment. Once the property gets subscribed, we do a drawdown of the balance money, allocate securities to them for that particular property. We issue debentures and equity to them. And whatever rents, eventually, once the property is registered, we pay them rents every month in the form of interest to the investors so that it's 100% pass through to the investors. So whatever money gets, it gets distributed to them on a month. So today, we distribute close to about 7 to 8 crores a month in terms of rentals to our investors, which is about 2,700 odd people, right?
Got it. And so it seems like you're attracting a lot of people on the webinar. So market awareness is not a challenge today. Like how ready is the market to get onboarded to such an idea? Has the penetration already been like people are ready, or it is ahead of the market?
Obviously, we had our the first phase of business was solving for demand, which we've been doing. So it was more about educating people on a regular basis. We had ask me anything sessions every week earlier, where I used to come personally and used to talk everything. Then we started doing every month once, and today I think we are at that stage where still a lot of India still doesn't know us. We still need to do it, but with the current stage of our platform where we were at level one demand supply matching, they're now at level two demand supply matching. I think enough and more people know about us, and we don't really need to be focused more on educating or awareness per se as such. I think we have reached to a point where people are talking about us in the parties, and that is a win from a situation like men, especially. I think once they are 40, they stop talking about which party to attend or stop talking about other women in general. They talk predominantly about what is the travel plan you have in mind or how's your job. And the biggest topic is where are you deploying your money or what is a great investment opportunity, right? So we are at that stage where men are and women are at their probably 40s are talking about us in the parties that, okay, these guys are doing good job. Why don't we consider
And the demographic is actually getting younger and younger, isn't it?
them? Yeah.
Especially post COVID, the investment behavior has changed a lot. So when you began this business at that time, were there already existing players in the market? Because I know the shift has happened in the last couple of years. Were you one of the early movers in India, or there were some existing players already in fractional real estate?
I think there were about five of them, if I'm not wrong, who at least had websites.
Hmm.
I think only one of them had a scale of 500 crores in terms of AUM when we had started.
Hmm.
So that was a big headway start, and they had started about 6 years before us. As
6
such,
years
from a
before
business,
you, a
6 years.
fractional a fractional ownership business 6 years ahead of you. Because I thought the movement of fractional only happened in the last 3 years. No.
No, so we came and completely spurred the market with our approach of doing business, our mindset, our vision, the way we look at this kind of the whole venture itself. So that definitely is one of the reasons why this industry completely changed or is changing in the right direction per se.
So,
As such. But there were three, four other players as well. There were websites, but there were no transactions. There were no teams. But somebody had an idea, like I'm going to do this, but eventually didn't. But to some extent, we went out and educated the market in a big way, uh, and that definitely is why many people think we are the first movers,
I
and
see.
as such, but we are pioneers today in terms of the scale of our business vis-a-vis competition today, the short duration itself. So hence many people do consider strata synonym with fractional ownership in general.
Got it. So you mentioned you said scale and size couple of times. So do you want to shed some light on the scale of your business today?
Yeah, so in the first year of business, we had 80 crore in terms of AUM. Second year, we had touched close to about 350, 400. That's where we were. We ended the last financial year at about 980. So an 80 to a 980 in 2 years, that has been the scale and the growth which we've had in terms of.
Right. So that's impressive. So when you're catering to this demographic, to this new age population who have a new a channel now to deploy their money, what are their incentives? So one is affordability for sure, okay, because now they can pool small amount of money into really big commercial real estate. But what else are the incentives? Is it dividends, a regular an extra source of rentals and stuff like that? Could you shed some light on what has been the behavior and incentives from their end?
So the investors, one of the like India is very fascinating. People know residential real estate as an investment is very bad, but they still do it in billions of dollars every year. Like last year,
Yes.
close to 3.6 lakh apartments were transacted,
Right.
got bought, and it was 55% investment and 45% end use. So you're
Hmm.
talking about close to 1.9 to 2 lakh apartments
Hmm.
being bought for for investment. So even if you take an average of a crore per apartment, you're talking about 2 lakh crores
Hmm.
being invested by Indians in residential, which is going to make 1, 2, 3% at max in terms of rental return. And definitely your tenants are not greedy because there are probably people like you and I who are tenants, and as we make money, we will go buy our own house, right? So tenants will keep coming and keep going at a very faster pace as such, right? And chances of us defaulting is obviously also very, very high vis-a-vis a greedy tenant.
Right.
So that is one of the core things which we, I think, hit the market because investors always aspire to own a commercial real estate, own their own office, or own the mall which they're getting into, or own the hospital which they're getting treated at, or own the warehouse in which their products are getting stored, etc., etc. That's what we ventured into, which means investors were making 4 times better rental returns than they would eventually in residential investment. Number
Hmm.
one, I don't think you need to sell real estate to Indians, right? I mean,
Hmm.
everybody has invested or has at least 70-80% of their portfolio in real estate. And that's how big this asset class is in India and how much people love real estate or understand real estate.
Right.
So it was just about a new approach. That was number one. Second is the whole appreciation piece as well.
Hmm.
Residential real estate appreciation historically has not been as great as what a commercial would eventually generate. Obviously, there are outliers and markets
Yeah.
and situations like what it is in Bangalore right now, where residential prices are completely skyrocketing, is because the number of people entering Bangalore is much more than the supply exists right now.
Right.
And obviously, pandemic had, I mean, right now there's just too much liquidity in the market also for it to attract that kind of asset. But that is the other one. But I think one of the core things, especially for NRIs, let's say people like you in Germany, you want to invest into India, probably a way you're connected back to your country, or you feel it's a better return market vis-a-vis a German market can offer to you. But the challenges for people are asset management itself. Like, hey, I don't want to keep going and collecting rents, finding a new tenant, paying property tax, insurance, reading the lease agreement, etc., etc., etc. It's a nightmare. We
Hmm.
have investors who are CEOs of large IT companies who spend their Sundays only going and collecting rents or meeting and checking new tenants in their properties, etc. Like, hey, I make $1 million a year, but this
Hmm.
is how I spend my Sundays
Got it.
right now, right? So, or a tenant created an issue where the association is called it, etc., etc. All these issues. Now
Hmm.
here we're solving for everything. NRIs also had a large problem where they never had the price discovery. They didn't know what is the price at which they are buying vis-a-vis an Indian is buying. It's always they end up paying 1,000 to 2,000 rupees more, and
Right.
that's the way developer covers his cost for NRI marketing, so whatever. But point is, why is he paying more? So today, this platform allows them to invest at the same term, same value what a normal Indian who's sitting in Bangalore is also investing vis-a-vis you sitting in California as itself.
Right.
So these are predominant reasons that one of very, very core fundamental thesis which we've realized over a period of time, which we are doing, is helping investors diversify their portfolio. Earlier, when you had real estate, even if you had 2 crores, you've just bought one residential real estate. You could not
True.
diversify your portfolio across this. Now we have investors who invest like 14 properties with us as well. So
Right.
he's diversified his portfolio not just across multiple properties, but across multiple geographies, across multiple asset types, across multiple tenant industries. So even if one tenant industry is going through a
Right.
tough time, other industries are not. So bunch of things which helps them to get a very good risk-adjusted returns and get a opportunity to play in certain high growth markets, which otherwise he would have deployed his entire money in one asset, he would have never got it.
Got it. However, so of course, it was always known commercial has better returns. The only problem challenge for most middle class people was affordability, which you're solving. But post COVID, the residential versus commercial, there has been a shift, isn't it? So the valuation of commercial is going down. What is your take on that?
Honestly, this is just a phenomena as such. If I have to put it up in the right way, it's a short-term phenomena
Hmm.
where residential looks attractive. You are a long-term investor. Look at a 10-year investment story. Don't look at a 6 months में ये हुआ, which means we should decide to quit the property, etc.
Got it. Yeah.
These are long-term investments. So typically, you invest in real estate for a minimum 7 to 10 year investment mindset. It's not a 1 year, 2 year product.
Right.
Your property price will not get doubled in a year or 2 or 4 years. Also, for that matter, you
Right.
have to stay invested for the compounding to come in for them to take advantage of that. So
Right.
if you decide to exit early or look at a short-term phenomena, then this is probably not an asset class they should even consider investing via us or generally as well. Right? It's just definitely not worth it at all.
Right, and the potential is immense, right? Because you're barely scratching the surface. People are only waking up to this idea, and there is immense potential because the market education will eventually happen. Because now I think you're catering to early adopters, but the mainstream adoption is still going to happen. So there's immense potential, and with potential, there are lots of players also swarming. My question to you is: when there are lots of players, is it all about capturing market share, or there is some way players can differentiate themselves uniquely or create a moat against similar competitors? Is there a play there where you can differentiate uniquely and be different and better than others?
Yes, so I think we are the only platform in the country right now which has offered 4 different asset classes to invest into. We've invested into a warehousing, we've invested into an industrial asset, we've invested in an office, we've invested in retail, and now we're doing our hospital asset also very soon. So probably the only ones who've given an opportunity to people to diversify. Again, we're the only ones in the country who diversified across 6 different locations where we are right now. We're there in Bangalore, Hyderabad, Chennai, uh, Pune as well as in Bombay, but also in Jaipur, which is a tier two story and a tier two market, which we have a very strong thesis in terms of the real alpha which can be created for ourselves. So that is the way we are already differentiating ourselves vis-a-vis competition. But to give you an answer, like you mentioned about early adopters, etc., I think India is a there's a demand and supply. We are a developing country, which means there is 2x the amount of supply which exists in India has to be created as well.
Hmm.
Also at the same time, and same, we are probably going to see a very very large upper middle class society going to be created with HNIs in a larger way. The wealth creation in India is going to be tremendously high. Something, if you have to just take an example, look at China, how it created wealth in the last 10, 15 years for all the people, and you have a very, very large upper middle class society as well as large
Right.
HNI segments. So that's one of the other segments you're going to see. So a lot of money, no new supply has to be created. It's a great match for them to do it. So I think year on year, it's a 20, $30 billion potential market to tap into the opportunity itself, right? I believe a good lion share, the big large funds would take away and go it, and big developers would take away. Even if 10-20% of that, which is about 4-5 billion, is there, I can't absorb it fully. There is a
Mm,
large opportunity for all the players to probably do $1 billion business every year for them to consider, because you're not just talking office space, you're talking industrial, warehousing, retail, hospitals, hotels, data centers, whatnot, right? So
mm,
there's so much more which needs to be done as such. So a single player definitely cannot absorb $3-4 billion a year. I mean, it's unreal for one of the platforms to do it. I think our capacity is to do probably 300 to a $500 million AUM every year. As of today, we'll probably keep increasing our capacity as we move forward, but definitely a 4 billion or a 5 billion capacity every year. I don't see us having that appetite or bandwidth for the next 3 years itself.
so good problem to have. So I had the founder of All DRX as well on my podcast. So what are your opinions on the tokenization of real estate through blockchain and stuff like that? Is that just the technology, or is this something that offers more than what plain fractional share offers? What are your thoughts around it?
See, so we are fractionalizing a real estate in a smaller ticket size of 25 lakhs per
Right,
se. So they are fractionalizing even to a smaller where you can own a square feet as such.
right.
I'm not a believer as much in the whole tokenization piece in general, and I try to follow the government trends. The way government is being banning crypto has taken very hard stance on the whole crypto tokenization. For some reasons, gets linked to that asset segment, while it's effectively not that, but it's more uh, a use case of the blockchain technology in general. While there is a lot of merits per se, I don't see us as Indian governments to look at it more proactively
Mm,
as such. That's my view. I would love to stand corrected as we move forward, but today, my prospective investors are 40 and above, 35,
mm,
40 and above. That's the average age on a platform. And when you talk about blockchain or tokenization, they first thing comes to their mind is crypto and it's illegal, right? So we don't want to get into something which will create confusion in the minds of our investors in general, and hence we are on there. There is potential, but I haven't seen anybody in the world who has really scaled up the whole tokenization piece as
mm.
such. So hence, from that standpoint, I am not so confident about how it can this can pull off in India vis-a-vis what the West also has not been able to do.
Got it. So this has to do with regulations, and on the topic of regulations, it was very nice to see in the last month or so on SEBI coming up with regulations in fractional ownership. I'm sure you have gotten into the depths of it. I just had a cursory glance on what the news was. But do you want to shed some light on what is the impact of these SEBI regulations in fractional ownership? Is it for the good of the market overall? Does it slow down? Does it accelerate the pace of this innovation? Shed some light on that aspect.
So any regulation is always good for the industry, right? It protects investor interests. It protects all the stakeholders involved in the thing, and there's a clear framework in how you need to operate within the boundaries. So with no regulations, anybody can do anything as such. And once unscrupulous platform comes up, screws the entire investor confidence and the industry in the making itself. So regulations definitely is great. I think. The fact that SEBI, who's the regulator who's going to regulate this space, has proactively come forward and said, let's regulate this. This is the new India we're talking about, where regulators are more proactive, creating laws before a mishap happens, or is promoting innovation more than anything else, right? So that's what I'm very excited about more than anything else. We've been talking with those for almost 2 years now, that please regulate, because this allows us to scale faster. When it's a regulated product, investors are more confident. Like you said earlier, doctors probably trusted you, etc. But with regulations, then it just becomes a product which everyone would be more than happy to consider in general, right? So that's where the regulations are. I think good part of the regulations, which at least has been proposed, and I hope it's going to be sacrosanct to what it is even foreigners can invest, even NRS can invest in dollars. Your taxation is going to be a little better than what it is as of today. That's another benefit. Everything gets listed, which means there's a potential where you can leverage these investments as well. Banks are going to recognize this as a leverageable security, which is not happening as of today. So much of merits as of today as part of this, but more so with regulations, you know if this player is following the rules. You have a body right now who you can complain if they're not following the rules. A higher disclosure criteria do come in, higher disclaimers have to come in, which again gives investors the potential for them to be more transparent and take more informed decisions about their investments.
Correct. And nothing that disappointed you, because regulators usually there are pros and cons, right? So is this anything that you thought irked you a bit?
I think broadly 2 points which were something we are going to request the regulator to reconsider. As such, broadly, I feel 90% was back on. I think in certain places they were lenient. They could probably be more aggressive in the initial days, and as the industry matures, they can probably come down. Like, for instance, the net worth criteria of 20 crores and keeping 10 crores in liquid, I think you can even do it 50 as such. So there are more serious players, there's more skin in the game. And then gradually, as the industry goes becomes bigger, then you reduce that down as such. Number one. Second, which like I said, which is definitely worth reconsidering is the us as a platform operator. We need to put 15% of our money, as our investment as well as skin in the game. They've taken close reference to what a REIT is and how the REITs have also have this kind of sponsor commitment to be put in. I think where I feel we are fine with it irrespectively. I mean, we are happy to bring in that kind of capital and have skin in the game. But frankly, what I felt, which was a disconnect, where they took the close reference to REIT. A REIT is bought by a developer. Developer has made that kind of margins, and he's putting that kind of money on the table, and he's liquidating a good chunk of the money and keeping his margins for 3 years, and then he has a right to take that out. I am more a facilitator, right? I'm an asset manager. You can call me a broker. You can call me a facilitator, whatever. My job is to identify an asset, negotiate on your behalf, and then bring it on the platform and do it, right? So I don't make those margins to put 15% every point of time. So this is one. And second is a no to under construction assets. While I understand why a regulator, from where he's thinking, but it's a proven theory that real alpha is made at brownfield stages as such. So we are wanting the regulator to reconsider if there is a potential opportunity, whether if it's a pre-tenanted, RERA, regularized, or whatever other framework you want us to put, which we're happy to put, probably have a PMC on board, etc., etc., etc. But if those frameworks are put forth, it becomes a great opportunity for our investors to make that alpha and probably come in. And like I said, India's 50% developed, 50% needs to be developed, which means there is alphas to be created if we come in a little early and deploy capital. And we want probably them to reconsider and create a framework around how we can do pre-tenanted, build-to-suit kind of assets in India as through the regulation.
Got it. I forgot to ask you about the business model in terms of, okay, how do operators like you make money, and is this standard across players, or different fractional owner operators dif- act differently? Is there also is there a regulation there as well on how much you can make as a commission for deployment, stuff like that?
Yeah, sure. So uh, we charge somewhere between 2 to 3% upfront as acquisition fees to our investors to get the deal on the platform. It includes brokerages which we have to pay to people who bring these assets, or generally meeting our corporate costs, etc. Uh, Second is we charge a 1% asset management fees every year to manage the entire cycle for the investors, the tech platform, everything which we give, and we are improving it constantly to make the entire experience amazing for the investors. The third is we charge a performance fee of 20% at a hurdle rate of 10% for our investors in terms of IRR.
Right.
Now there are different platforms who charge differently, who are at early stages to probably build the platform, give more lucrative discounts, etc., to the investors. We strongly feel that this is a very fair ask of what fees which we charge as such, because that is the amount of effort he would have also had to take to do something like that. And as an investor, you want us to stay alive and not go bankrupt as such. So if you're making money, we are always there to handle your property assets. Many people have also come back that is this enough? You should probably charge more. And always there are people like, hey, you guys are charging more, you should reduce as such. Uh,
Right.
but we feel we are in that optimum point where we can meet our corporate costs as well and service our investors to the best. And so whatever money we've been generating, we're reinvesting back and enhancing our tech experience for our investors on a regular basis.
Right.
As such, that's one. There is a portion in the regulations to cap the expense ratio
Mm.
as such. So whatever it is, if the regulator does decide, we are happy to abide by that.
So what are the flexibilities you're offering to the investors in terms of exiting from an investment? Is it do you lock them up for a few years, or how does it work out?
So first and foremost, this is an investment asset class only for people who have a mindset or a time frame which they can hold this investment for at least 7 to 10 years. It's
Mhm.
not for short term investors. So if you come with the mindset that hey, I'm going to take an exit in 2 years, 3 years, 4 years, don't waste your time. We are very vocal about it. We keep telling our investors as well. Please don't waste your time. We are not meant for you at all.
Mhm.
Please put your money in FDs, bonds, whatever, etc. you want, but don't consider us as such because you're not going to do justice to your own investment. But we do have a resale platform through which investors can liquidate. We've facilitated almost $3 million or 23, 24 crores of assets uh, through the platform for investors. We have a wait list in most of the assets. And many
Mhm.
investors who invested 1, 2 years, 3 years in the property, they know it's all great, comfort. They come forward first and they're like, hey, if there's any exit, I'll buy out because instead of investing into an unknown devil, I rather invest in a known devil
Right.
and have a more secured investment return for myself. So that is also one of the trends which we've been seeing as such. And with regulations, everything is going to get listed because then it becomes a much more open platform for investors to do consider exiting through their investments.
How about valuations over time? Like, do you give a tracker to your customers with the help of tech where they can see what's the valuation, how the valuation of a certain, yeah, property is increasing over time or performing over time? Is that some calculations you provide regularly with?
Yeah, so I think this is where we had an edge over everybody else. So we were the first ones to provide valuation reports every 6 months to people, give market insights of all the sales which is happening every 6 months again, if there is any change, so that they are aware about what is happening per se. That is one big thing which we do. We appoint the leading IPCs to do it. We take a different IPC every year so that they get two different perspectives as well and two different methodologies in which they've probably been valued as an asset as well. But many times what happens is people do see, oh, I invested in a 50 crore asset, it's already 70 crores. Uh, but that is because the market is at mark to market. Your rentals perhaps are not at that stage where you had a mark to market. So probably you have to wait for the lease to end, get a mark to market, and then your asset is about 70, 80 crores. But your rentals today probably might justify you to be at 60 crores as such, right? Like, for instance, you're probably getting 70 rupees per square feet as rents, where vis-a-vis a new building or the building next door is getting 80, 90, 100 rupees per square feet. So till your lease does not end and you're able to get that same 80, 90, you may probably not get the best capital value. Because any new investor, like, hey, while the market is at 100, you're not getting 100, so I'm not paying you the capital value of 100, I'll probably pay you the capital value of 17. Right? So that is also one of the things which certain investors who don't understand how mark to market or how commercial real estate works are like, hey, I want to exit at this price. I'm like, hey, you need to wait for the asset to get that value for you to get the real, capital appreciation which you are targeting.
Is everybody working with IPCs to come up with regular valuation, or are there other ways to perform valuation every 6 months? Like how does it work out?
Yeah, so I think everybody works with IPCs because it's more branded, it's more trusted as such, and they obviously have large teams and scientific approaches to do it. The other way to do it is, like I said, based on a cap rate vis-a-vis the rates which you're getting to get a fair assessment about your property. Yeah, but I think more or less everybody is.
And I also didn't ask you about your fundraising story when you began. Was it bootstrapped to begin with, or did you have somebody backing you? And what happened since then? I thought you had some funds raised later as well, isn't it?
Yeah, so we raised two rounds of funding. We when we started our business, the minute we closed our first asset, just before our first asset, we had raised a round of funding from Elevation and Mayfield. We had raised about $1.5 million at that point of time. Pandemic hit us. I'm sure even they were wondering that, damn, my money is gone. Who's going to buy commercial real estate in the pandemic as such? But again, they are also smart long-term investors. They understand that it's a short-term phenomenon. Things are going to bounce back. Uh, and then the next round, we had raised money from Kotak Investment Advisors. It's one of the largest private equity domestic fund. They manage $8 billion in India, investing into real estate and alternative assets, etc. Then we have Gruhas. You had interviewed them sometime back. Abhijit and Nikhil, both of them also participated along with the DLF family office at that point of time. So two rounds of $1.5 and $6 million. 7.5 million is what we've raised till date, and that's where we are.
Excellent. Thank you. My last question here is how does the next year, 2 years, 3 years look for you in the timeline, in the horizon?
See, we had a goal to fund an asset in 1 hour. We funded our last asset in two. So we are almost there in terms of goals. So we don't make these very, very long term goals. We like to make multiple short term goals and we want to achieve them much faster. I mean, while I dream the larger picture, but to the team, while they know the larger picture, but we make short term achievable goals and we chase them to achieve them faster than what we are targeted as. So the new short-term goal is to achieve $500 million AUM, achieve $1 billion AUM, subscribe an asset in 1 hour, exit at least about 3 or 4 assets, and give good IRR returns for investors in 3 or 4 years. As such. So these are the short-term goals which we have for ourselves, and move into different asset classes. Like I said, we've been very bullish about hospitals. We're trying to go deeper into that. Probably data centers and hotels also very soon, and see how we can make more money for our business.
Excellent. Well, this brings us to an end of a very fascinating conversation with Sudarshan. Sudarshan, thank you for taking time out and being with us today and educating us. Thank you so much.
All right. Thank you. Have a good one.